So as we have already seen and explored today, crowdfunding is simply funding. It's another source of funding. Instead of going to the bank, instead of going to any other type of investor, you go to the crowd and you raise funds. Of course, you don't raise them in any magic way. Unfortunately, from my experience, I have seen a lot of our clients, they think that they will post something on a platform and the next minute it will start raining dollars or euros or yen or I don't know, Swiss francs, whatever currency they wish, and they will do the campaign that they dream of. Unfortunately, it doesn't work like that. So usually a successful crowdfunding campaign, it has a breakdown of three pockets of investor types. So the first pocket is the requirement to have an anchor investor, then friends and circle of the founder, I would say 20 to 30% each pocket. And let's say you reach a 60% fulfillment of your capital, of your expected capital raise, and then you may see people coming from the unknown investing in your company. But until you reach 50 to 60% target, it may be difficult to raise anything on the platform. So who is who? The anchor investor. The most usual type of anchor investor is a business angel. So you have a business angel that wants to invest into your company, and at the same time you would like to lever this opportunity and grow into a crowdfunding campaign. So this business angel can invest through the campaign and be your anchor investor and fulfill a big ticket of the 20-30% investment that requires to anchor you. So when I say business angel, it may also be a club of angels or a syndicate. It doesn't necessarily mean to be one single person, but it's one single pocket of investments. And then friends and circle, this is where you need to have an elaborated social media presence, either as a company or as a founding individual. And at the same time, this is where you need to have a large network of people that they know you and they believe in you, may have seen you doing that in the past, or if it is your first time, they believe that you can do it. So it's quite important that you lever this network and you drive the wave with the business angel and friends and circle. And then up to that point, then you are expecting that the platform will do the rest for you. And what I mean the rest, they will mobilize the investors that they have on the platform to join this momentum and actually even oversubscribe your expected type of investment amount. In terms of amounts, I have seen investments fulfilled on a crowdfunding platform as low as 5 to 10K, all the way to 2 million. And on that occasion, we're talking about shareholders' equity. We talk about diluting the founder. We talk about having new shareholders in your capital structure. So I have also seen companies doing one campaign, then doing second and third one. So they raise capital in different types of campaigns. And that means they keep their circle engaged and they keep the momentum going. So in terms of sectors, in general, it may work on any sector. In practice, it works mostly with sectors that they have a consumer angle. And when I mean consumer angle, I mean a type of product or a company that people can understand. And this may be, for instance, a producer of a soft drink or a retail online bank. It can be anything from tech to non-tech, but something that people can understand. So if it is something elaborated, I don't know, rocket science, deep tech, you may have some trouble raising as much as others did, simply because people, the crowd, don't really understand what you're trying to achieve through your company or your product. And the other thing that, from my experience, our clients don't seem to understand is that there is a lot of work involved. It's a huge commitment to go through a crowdfunding campaign, and it can be an onerous task, especially given that we have usually small companies and startups going through that, and it's very difficult to tackle, because remember, if you are a founding team of few individuals, you have to run the business, you have to serve the customers, and at the same time you have to go through and prepare a lot of work that it needs to be going through the crowdfunding campaign. So you have to do the marketing preparation, and this is where you have to stand on your own feet, trying to be an influencer if possible, and trying to engage even your customers, and make a good decision about the platform choice. It matters to have a good platform, good from your point of view, because the different platforms may suit different projects. They make special niche in some sectors, some others they make in some other sectors. It's also a geographic habit. The platform can suit some investors in, for example, in the UK only. Some others may be European-wide, and so on. And there is a lot of financial documents that need to be prepared. Let me remind you that a platform is a regulated entity, the same way that a stock exchange is regulated, the same way that a bank is regulated. Of course, they have different types of regulation, but they're still regulated within the overall financial system. Now, in terms of financial documentations, you may need an information memorandum, because you're placing an equity placement. It needs to accompany that. And there is also some documentation in terms of due diligence. So there was a question earlier about that. Definitely the big platforms, they will do some basic due diligence. They will bring all the documentation in front of the investor. The investor can go through them and check that this is actually true and right. It is their own thing to do, the investors. But the platforms, they will also do a diligence, a basic one. And let's say if it is a soft drink manufacturer in Manchester, and you're based in Madrid, you're not going to take the plane, go to Manchester, check that they have a factory. You assume that this is something that the platform has done for you. So this is also another level of comfort that you can have going through these platforms. Now, when it comes to the region, Greece and Cyprus, what I would like to share with you some thoughts about the necessity to have in place a chain of ecosystem participants for the crowdfunding to work. Because remember, if you are an investor, a crowd investor, you will invest because you expect a return in the future. For you to have a return, it means that someone else must buy you out. That means there might be a venture capital fund down the line to do so. The venture capital fund will buy because they expect a private equity fund to buy later on, or they expect a strategic investor to buy. And all of this, they expect that there may be a listing, an IPO, happening in the future. The Greek ecosystem is quite liquid in terms of stock exchange volumes and so on. We have seen deals in private equity space. On the VC space, not that a lot, only the last, I would say, 10 years, we have seen a lot, and that's thanks to the European Investment Fund, mostly, that we have seen some VC deals. However, we haven't seen much in terms of business angel investments, which is usually the anchoring of these crowdfunding investments. And this is something that I believe we may see in the next few years. And if we have all the components in place, then you may have a potential successful crowdfunding campaign, provided that you have the right platform. And I wouldn't expect that a Greek or a Cypriot company, for example, will go and list on Seedrs, which is a UK platform. Because Seedrs caters for an investor audience that is a UK-based. And UK-based audience, they expect certain tax benefits when they invest that they won't get if they have a Greek company there. So that may not be the right platform for a Greek-based company. And this is where I believe there is some space for some crowding platforms locally in Greece and Cyprus covering the region. Some of them, they may also list in Greek, which a lot of potential crowd investors may find it more appealing to them and easier to comprehend and understand, rather than only the English language. So when it comes to Cyprus, the ecosystem is quite fragmented. There is not in place all these building blocks, and therefore it's not that simple to have a crowdfunding campaign succeeded with local investors. Of course, you may have a Cypriot company creating a holding company, which may be in Delaware, in the States, or in the UK, and then they can raise international funding, which is a different story. We're talking more about local investors supporting local companies. Now, and the secret sauce, in my opinion, for having a success in crowdfunding is to have secure the anchor investor, to be, as a founder, an influencer, so that people know you, you are well known, and also your company or product or idea has a consumer angle that is completely understandable by the crowd. And of course, it is only the secret sauce. If we are missing the dish, which is a suitable crowdfunding platform, still, even if you have these three elements, you may not have a successful crowdfunding campaign.